Welcome to the video today, guys. Today we're going to review our WEBULL dividend portfolio. We got some big news. We've actually, now that it's November 1st, we've actually been investing for a full 12 months now. In the video today, we're going to review our deposits, our purchases, and our dividends received. For the month of October, we deposited $200, and we are currently waiting for our money to settle. As far as our purchases for the month of October, I do not believe we purchased a single thing. No, we were not able to make a single purchase. As far as our dividends received, we received $3.24 from Oxford Lane. We received a whopping $5.30 from Federal Realty. We also received $1.43 again from 3M. We received 70 cents from Realty Income Corp. And then we received $3.03 from QYLD. We also received $1.70 from Horizon. And look at this, guys. Foot Locker has started to pay the dividend again. It's not what it was before, but it's still, they started to pay the dividend. So we can take this little yellow thing off of here because they are now paying us money. So we're going to go through, see what other dividends we made and which ones we missed. If you remember, we got that one, so we can make that one green. It's not that color green, though. And we did not get the EPR. We did not get the Apple, and that's the Hotel Apple. We got the QYLD. We got the BGS. And it looks like Foot Locker paid a little bit early compared to what it used to do. Oh, it must have just been a tad early. It was like a day. So we can put these guys in here. Boom. So that's neat. So we missed the first dividend for the year. Got the next dividend. They quit paying the dividend for 5 months. And now they're back to paying the dividend. So that gives us hope for these other two here that quit paying the dividends. And then also these two. Hopefully by next year, these guys will start paying the dividend again. Something I want to point out is the fact that we are real close. We'll probably purchase another share of QYLD. That's been the stock or the fund that we've been buying with our dividends so that we can increase our monthly dividend payments. But as you can see, we're up to $3.03 every month. But it's pretty neat that after a whole year of investing, we made our first deposit. Let's see if we can figure out when our first deposit was. Our first deposit was November 7th was the initial deposit. So we've been investing for a full year now, and we've got our total amount of dividends received, if you can see here, up to, so far, we've received $145.18, which is pretty impressive for only having about $4,000 invested. As you can see, we are currently down $561. We've been real close to being back to even. We've been down to in the $300, about the $300 range we've been back to. But if you remember from about March or April, we were down over $1,000. And look, we actually have some stocks that are up. And if you look at the total return column, which is right here, you can see that there's a lot of stocks because of the dividends. We are up. In this one, we've almost double our money. The BGS Foods, or the B&G Foods. So hopefully by next year, we'll be able to, or by the end of the year, we'll be able to add some more money. Now that we've fully funded our Roth IRA, we've got about 8 weeks left of payments, I believe. Let me see here. See, we've got about 1, 2, 3, 4, 5, 6, 7, 8. Yeah, we got 8 more payments to make into that, and then we're fully funded for the year. But basically all we have to do is finish making these scheduled payments right here, which will add the last $708 to our Roth IRA. And we will have successfully funded 2 years worth of our Roth IRA in 1 year, which is pretty impressive. And thank goodness for them bumping back the tax deadline to July, which allowed us to do that, because we started after you were able to contribute normally to your Roth IRA, but we were able to fit in all $6,000 by the end of July. So that was a pretty good accomplishment for us. So, we just started our Roth IRA this year. That just goes to show that even investing a little bit of money will get you somewhere. So the good thing is that with all the stocks and the funds that we have purchased in our WEBULL account, our total yearly income from our dividends will be $283.65, even if we add no money. So like every so often, we'll get about average $23 a month, which is perfect because the fund that we're buying is only $20. So basically, every month we should be able to add about 1 share of QYLD, which eventually, or essentially, will add about 23 cents a month to our monthly income. That's pretty exciting. We've been keeping track of all of our investment accounts that we've been sharing here on this channel, which is our WEBULL Dividend account, our M1 Finance Growth account, our M1 Finance Roth IRA, and then also our Fidelity Health Savings account. So that's 4 different accounts, all with different types of money going in, kind of. But as you can see, our total amount for the year of the dividend income that we could receive is $844.69, which is pretty awesome. And so far we've received $279.78. So that's pretty neat. Like, this would be money, like we've got a total, let's see how much money we've got. We have invested a total of $18,292 and I think it's 35. Let me see. 38 cents. So a total of $18,292.38 has been invested. Currently, we're only down $567.31. But the thing I keep telling myself is if I had not started investing, more than likely I would have spent this money on something else. Maybe, maybe not. But if that was the case, theoretically, I would have absolutely $0. I would have some stuff, but I would have $0. But in this case, I basically have spent $18,000, and I still have $17,746.90. But on the other hand, I'm going to make $844.69. So you tell me, what's smarter to do? Is it better to spend your money on other things, making other people rich, or is it better to invest your money and hopefully make yourself a little extra money? And maybe one day you'll end up rich. Answer that question down in the comment below. Thanks for watching. We'll see you in the next one. But as you can see, we're getting quite a few stocks and ETFs in there. And one thing I really want to point out is this chart right here. Let me see if I can make this a little bigger so you can see the full thing. Is this chart, all of these white ones are all in tax advantaged accounts. So I should not have to pay any taxes on any of the money made in this account. So the capital gains, the dividends received, the money I make on the dividends, all of that is tax free. This is in my taxable account, which is the WEBULL account. So I literally only have 1/4, less than 1/4 of all of my money in a taxable account. That way I can take advantage of the tax benefits of these other accounts. So going forward in 2021, I'm going to try to fund these 2 accounts before I fund these accounts. So I'm going to work my butt off trying to get these ones fully funded so that we can add to this account. So we can add more money to the WEBULL account so that we can hopefully use that WEBULL account to replace our paychecks feel like we're getting pretty diversified overall as far as the sectors and stuff. There's a couple sectors we probably could get a little bit more money in, but for the most part, we are doing fairly well for being new investors. I still have most of my money in ETFs, and then I've got the individual stocks here too. I don't know. I feel like we're doing pretty good. So it is a slow process, but once you start getting more money in there, the amount of dividends really add up quick. Also, when the stock price changes just a little bit, it makes a big change, whether it's good or bad, in your portfolio. Because, like, let's say this stock right here, let's say this stock goes up $1 from, let's say it goes up to $33.54. That's basically $114 that fund goes up. So, I mean, it just takes a little bit of move either way, and it's a big gain or a big loss. So, but that way, the stock price doesn't have to move quite as far to get you more of a gain. We personally, at this point, are not worried about the stock price. I really want to try to only add to these stocks up here when they're in the red. I may take one section of like towards the end of the year and maybe add to the winners, just because some of these stocks I would really like to double the dividend income. Like, I've been really excited about Sunoco. I was able to dollar cost average down to $21. Remember when I was trying to buy this for $30.50? That's all I wanted. Well, right now, I mean, it's $25, but I was able to get it. I think I bought it at one point for like $15. So I wish I would have had more money at that time when I did that. But I'm tempted to take another $100 just to get the dividend payment amount. Right now I'm getting $26, but I would like to get this number to $10 every time they pay us, which would be amazing. So I would need to add about almost like $150 or so to it to get it to that point, which might be well worth it. Especially because this one did really well during the downturn. Like, they didn't cut the dividend wasn't in question. And I would also like to get some more in Unilever. That seems to be a really good one. And this B&G Foods, man, this one, I've almost doubled my money a couple times. I had it all the way up to 90% return just in the stock price. So if I can add a couple more shares to that one pays pretty decent. So I'd like to get that one to $10 a year. I would have to double down on that one, so I'd have to have about $75 put in there. So, which may be pretty feasible, but we'll keep at it. I'm really excited that I did start the Roth IRA and the online Fidelity investing health savings account, because just the returns in the health savings account has been super helpful. As you can see, we're up theoretically on paper $54, but just the dividend money right here, we've made $30 almost in dividend payments, which blows the interest rate, the amount of interest we were getting paid by the bank, out of the water. So as far as I'm concerned, that one's definitely winning. So that's one thing. If you got a chunk of money in your bank health savings account, think about getting a Fidelity health savings account, or just investing health savings account where you can invest in the stock market, because you'll get more of a return on your money in the long run. So another thing we're focusing on is we're just buying stocks. We're going to buy stocks for about 10 years, and I do not plan on selling a single stock until I get to the point where I'm retiring and I need to tap into my money. But I'm hoping to be able to purchase enough stocks and ETFs to replace my paycheck. We're currently, so far, for the first year of investing, we have been able to replace one entire paycheck for the year, or 25 more paychecks to go. I've got a 10-year goal to get both of us to that point, and I basically have a 5-year to get at least one of us to where we've fully replaced our paychecks with dividend money. So stay tuned. Make sure you subscribe. Hopefully this is helpful. Maybe it'll motivate you to start investing, or at least saving your money instead of giving it to everybody else. That's the number one thing that I think, is that most people make enough money to become wealthy, but they feel like it's more important or more beneficial, or it makes them happier giving them their wealth away to other people. Stick around. I got a couple good videos coming up where I want to talk about my investing strategy, my plans for next year, and we're going to make a goal video again for investing. So thanks for watching. Make sure if you want to see some other investing videos, make sure you check out the videos on the screen or the videos in the sidebar. Thanks for watching.